back. Economic growth slowed last year to its lowest rate since 2009. This as strikes in the mining and manufacturing sectors crippled production and demand remained weak. Gross domestic product data from Statistics SA showed today that although the economy grew sharply in the final quarter of the year, this was not good enough to significantly lift the overall growth rate for the entire year of 2014. So the economy grew 4.1% in the fourth quarter of last year. The significant contributors during the fourth quarter were manufacturing, contributing 1.2%, mining at 1.1%, and finance, real estate and business contributing 0.7%. South Africa's annual growth for 2014 as a whole came in at 1.5%. Okay, well, Econometrics chief economist Dr. Azar Jammine joins me now to talk about the growth figures. Azar, thanks for coming in.
Pleasure.
At 4.1% in the fourth quarter of last year, that's better than expected. Would you consider that good enough to be good news?
Yes, I do think it is good news because it showed a certain amount of resilience in the economy, that we were able to bounce back from the debilitating effects of the strikes in the mining, platinum mining and metal workers industries earlier in the year. And we also had a bit of load shedding already in the fourth quarter. One shouldn't forget that. And despite that, we were able to recover quite nicely. Admittedly off a low base, but it was better than expected, as you suggested.
We just saw those contributors there: mining 1.2%, manufacturing 1.1%. That's the best we've got, so that's a bit concerning. I mean, is it about really creating new growth drivers or bringing down the barriers to growth?
I think it's more about bringing down the barriers to growth. What is interesting, you mentioned in your preamble that economic growth was the lowest in 6 years. Well, the average growth in mining and manufacturing over the last 6 years was virtually zero. They didn't grow at all over that period. And a lot of that has to do with interference on the part of the government with all sorts of regulations, incentives which are supposedly well-meaning but actually end up being more of a hindrance than a support for growth.
Now, let's look at 2015 here. We've got growth for 2014, 1.5%. It really becomes a little bit more uncertain this year when you look at the power cuts, when you look at load shedding. We take, for example, the engineering body SABC saying that they expect to lose production of up to 23% if power cuts continue the way they are continuing. I mean, this perhaps means fewer workers in that industry, not good for jobs. What's the effect of power cuts on the economy this year?
You cannot escape from the fact that they are very negative. Having said that, you know, I think in practice the effect could turn out to be not as bad as we are made to believe. Part of the reason for my saying that is that we've been having power cuts actually for the last 3 years. It's just the average consumer hasn't been seeing them, but industry has already been seeing them. So it's not as if this is a new thing for mining and manufacturing. It's one of the reasons why they have been growing by so very little. So it's really the consumer, this residential sector, that is feeling the effects of load shedding. But at the level that we've had it thus far, I think it's still been possible to overcome the effects without it having an unduly negative effect on economic growth. And I think that's what these fourth quarter figures actually encouragingly suggested.
I suppose it is encouraging, and it's hopeful that business and governments and the role players are talking about the effects of power cuts. I mean, this is happening on a continual basis. It
is a very constructive discussion, and all sorts of manner of means is being sought to try and alleviate those power cuts. And I participated in a discussion with Eskom on Friday, and it's amazing to see what is being done, even if it is costing a lot more money. So the burden actually flips over to the government itself to finance that.
All right, so Azar, we need a good economic growth rate, primarily for two reasons. One is that we get more people in jobs, and secondly, we get investors interested in the country. Now, Nhlanhla Nene, the finance minister, tables the budget tomorrow. Is there anything he can say, even with regards to policy, that can boost growth?
Well, if he does come across with many business-friendly announcements, I think that will help to boost growth. However, what we keep seeing is on one side we have these business-friendly announcements, and then you get the kind of comments made by President Zuma in his speech at the celebration of the ANC's birthday in January, where he says to the unions, be careful, you better stay united, otherwise you will play into the hands of the bosses. It's almost as if in a derogatory manner. If business keeps being seen in such derogatory terms, that is not going to be conducive towards more investment. And we need less regulation, not more regulation.
Right, so it's about red tape for business as well, a big one. What about the Davies Tax Commission? I mean, what are you expecting the Finance Minister to tell us there? I think it's long overdue. I
think the Davies Tax Commission has done a lot of research, but I don't think that all their recommendations can be put into place just yet. And it's for this reason that I'm hoping that the Minister will buy time by putting the burden of tax tomorrow on the fuel levy rather than on personal tax or VAT. And there are many merits in raising the fuel levy more substantially. It is a regressive tax. The rich pay more, the poor don't pay as much, and the unemployed don't pay any of that fuel levy. Secondly, it's a method of raising taxes that's been used in many countries overseas, especially in Europe, rather than lumbering personal tax or VAT. And thirdly, it's environmentally friendly, because the higher the fuel price, the less that people will be inclined to use vehicles, and so less pollution.
Well, watch out for that budget speech tomorrow. Econometrics Chief Economist Dr. Jammine, thanks indeed for coming in.
Pleasure.